Hello, friends. December 5, 2024. I'm going to briefly talk today about globalization and wealth transfer. In a nutshell, globalization has acted as a wealth transfer mechanism from the rich nations, especially the United States, to China, and I'm going to discuss a few things with you and also show you some data where today you will find out. But I mean, uh, let's look at the slide globalization and wealth transfer, December 5, 2024. There is no investment advice or any advice of any kind in this video, just my own opinions. Uh, let's move here. This is how Shanghai was in 1987. And this is how Shanghai was in 2013. Where do you think the money came from to go from this to this? Where did the money come from? From the pocket of the US consumer. Of course, they got products, but what kind of products? This is the issue here. What kind of products did they get? Well, before we discuss this, let's look at an excerpt from the book on International Economic Relations since 1945 by Catherine Schenck. What it says is that there was a trend to make currencies free, the exchange rates free, but a vital exception to this trend was China, which pegged its exchange rate to the US dollar in 1994, and then sustained that rate through a decade of dramatic economic growth and the trade liberalization. In the context of the trilemma, which is the economics trilemma, we're going to talk about this some other time. They want to retain Polish sovereignty by imposing tight controls on flows of capital. That means capital controls out of the country. As their competitiveness increased, the demand for the products grew, and foreign companies flooded into the Chinese economy, bringing substantial and growing amounts of investment. The result was that the 1994 exchange rate soon appeared undervalued, and China accumulated huge foreign reserves from the trade. In 2005, along with some liberalization of financial markets, China moved to a slightly more flexible rate to allow appreciation of the yuan. The huge Chinese balance of payments surplus nevertheless continued to accumulate, contributing to the globally balance that prompted the 2007-2008 international financial crisis. This is not the story. By the way, this is excellent. This is excellent. And you don't hear about the real driver of the 2008 crisis. You hear about real estate bust and CDS, but the driver was the liquidity that came back to United States from China through trade. that trade was supposed to be a win-win arrangement, as they said in the early 2000s. United States would export inflation to China, and China would export deflation through products. But what kind of products? Let's see. This is the rate, the dollar, the one rate, and see here how from about 2094 to, let me put this, from 2096 to 2006, it was pegged to the dollar. Then they sensed something was wrong and a crisis was about to happen, and they started, they let the currency rise, but it was too late. It was too late. And now you see again it's rising because China wants to get competitive again. They have some issues with export competitiveness. So this is what happened with the exchange rate. And why am I showing this? This is. I mean, the data is here. This is my 1991 Sweats from New York Stock Exchange, and it was made in USA. It's still almost perfect condition. Perfect condition. I wear it. I played before with a dog when I had a dog. Now I have cats, and it's still perfect condition. It was made by a company Midwest, made in USA. This thing, New York Stock Exchange, 1991. Let me show you something else. These are the data. This is Zipapa sweat. I bought this from a shop on King's Road in London in 1988. Yes, 1988. How long ago? 35 years ago, 36? Still like brand new, made in the UK. Okay? Still like brand new. How much I paid? I think it was about $40. Now, this is the point why I'm saying globalization is wealth transfer. The products that make it China, they last 2 to 3 years. If I pay $20, well, it sounds cheap. Cheap. China is giving us cheap products, yes, but every 3 years, it would cost me, not in a present value, no, I'm talking not in real value, nominal, like $240. The same thing that cost me that time $40. Like, take an inflation, maybe, $80. So this is the wealth transfer. This is what enabled this miracle. The wealth transfer from the American consumer, which was sold a story of cheap goods, but low quality, that don't last. So China amassed this wealth, and here is the volume of US imports of trade goods from China from 1985 to 2023, from $3.86 billion in 1985 to $536 billion. This is money that the Federal Reserve and the Treasury, they have to print. That's why the trade deficit and the public debt is so high. The money goes to China, and China is becoming strong, and it they are challenging the status of the United States as a reserve currency and with BRICS and everything else. So these are my data. I bought this in 1988. I was out of college. I went with 4 friends to London to celebrate. We got a job, and two of them from Boston and two from New York. And I bought this in a shop on King's Road, and I still have it, and it's almost like brand new. Same with this New York Stock Exchange. It's still almost like brand new. After like what, 33 years. And now you buy things from China and they last 2-3 years, sometimes 1 year. So this is wealth redistribution. Well, what can I say? You know, if you don't get it, or if you are an economist who thinks this is a win-win situation, you ought to rethink your assumptions, and maybe you don't have data like I do. I have the data here. You see, the zip up is the data. I don't look at charts. I look at my zip up here for data. So this is what I want to talk briefly today. And I hope you get the message that globalization was essentially a wealth transfer. Maybe it was not meant to be, but ended up being that, a wealth transfer. And probably it needs to stop. Otherwise, the addiction to cheap products from China will create tremendous problems for United States and also Europe. I think Europe is suffering more. United States has still great capacity and fantastic people, hardworking people, and they can restructure and manufacture things again. I don't think Europeans can do it any longer. I'm optimistic about United States. I think they will understand. It's the government and the officials. I'm with nobody. You know, I don't care who is governing, as long as they understand the problem. And they will understand that this model is not win-win, and it's unsustainable for the future of this great country. God bless America.